Stock Market Basics, Best Tips for Beginners. Part 2. Everyone knows that you can make a lot of money in the stock market if you know what you're doing, but beginners don't often understand how the market works and exactly why stocks go up and down. Here's what you need to know about the stock market before you start investing. If you're new to our channel, then subscribe and stay connected with us by comment, and share this video. Try a stock market simulator before investing real money. One way to enter the world of investing without taking risk is to use a stock simulator. Using an online trading account with virtual dollars won't put your real money at risk. You'll also be able to determine how you would react if this really were your money that you gained or lost. That can be really helpful because it can help people overcome the belief that they're smarter than the market, that they can always pick the best stocks, always buy and sell in the market at the right time. Stay committed to your long-term portfolio. By skipping the daily financial news, you'll be able to develop patience, which you'll need if you want to stay in the investing game for the long term. It's also useful to look at your portfolio infrequently so that you don't become too unnerved or too elated. These are great tips for beginners who have yet to manage their emotions when investing. Some of the news cycle, at times it becomes 100% negative, and it can become overwhelming for people. One strategy for beginners is to set up a calendar and predetermine when you'll be evaluating your portfolio. Sticking to this guideline will prevent you from selling out of a stock during some volatility or not getting the full benefit of a well-performing investment. Start now. Choosing the perfect opportunity to jump in and invest in the stock market typically doesn't work well. Nobody knows with 100% certainty the best time to get in. And investing is meant to be a long-term activity. There is no perfect time to start. Because if you invest now, and often over time, that compounding is the thing that can really drive your results. If you want to invest, it's very important to actually get started and have an ongoing savings program so that we can reach our goals over time. Avoid short-term trading. Understanding whether you're investing for the long-term future or the short term can also help determine your strategy and whether you should be investing at all. Sometimes short-term investors can have unrealistic expectations about growing their money. And research shows that most short-term investors, such as day traders, lose money. You're competing against high-powered investors and well-programmed computers that may better understand the market. Keep investing over time. It can be easy to dump your money into the market and think you're done. But those who build real wealth do so over time by adding money to their investments. That means having a strong saving discipline, holding back some of your paycheck so that you can put it to work in the stock market. You'll be able to put more money to work and grow your wealth even faster. For more in-depth analysis and exclusive content, visit our website at financialmarkets.online. Don't forget to like this video, subscribe to our channel, and hit the notification bell to stay updated on the latest financial trends.